Hey, listeners, welcome back to another CAS packed episode of Fancastic with me, your host, Dr. Kristy Short, and the person you really came to listen to, CAS expert Christine Triantos. Hi, Christine.
Hello, Miss Short.
It is so nice to see you, and we've got such a great topic today. Um, the big question being presented today is your CAS engagement letter protecting your firm? And we know that firms love to use templates and reuse documents. And basically what we're asking here is, does your CAS engagement letter actually protect your firm, or are you using some template that is not CAS proof? So let's jump in. Let's talk about it. So why aren't audit and tax letters enough?
Mhm. Well, I mean,
Mhm.
and this goes with our whole theme, right, throughout this podcast series is shifting the mindset, right? And so, if as firms start to build their CAS practices, it's just basically like, what do we have? What can we put in place? What can we just plug, right? And so when you get into like the legal document side of things and you're looking at the engagement letters and statement of work, the SOWs, it's typically an audit and tax letter that has just evolved into some type of CAS engagement letter, which the risk at which CAS operates and the amount of information, client information that we have, and the service offerings that we're doing, and processing payroll and paying bills on their behalf, and all of the things, it's just the audit and tax engagement letters obviously are not going to cover those aspects and those risk points. And so therefore they're just not good enough. And so, we work with a lot of clients from a consulting perspective and we ask to review their engagement letters. And I just it pains me to think of how much firms are putting themselves at risk because they don't have all of the content needed for CAS offering.
Which we are going to go over today. So people are going to get step by step what should be in a CAS engagement letter. But before we do that, can you just quickly give an example of what can go wrong when people are just reusing audit and tax
just
letters? A lot,
just
right?
one
Just
Just one
well,
example?
as many as you want.
Um, one that comes to mind though is an example that we had a really, really large client, and they had their proprietary system, right? And so they had data going into their proprietary system that we would extract from their system and create financials off of. Well, they didn't lock that system down. And so that data changed over time. Or if they made any adjustments, it would go and make historical changes to that data. So at the end of the year, when we were tying out what we had versus what was in their system, it was different. And they're like, what are you doing? Like, where'd you get this data? So we took screenshots at that point in time. Like, this is when we downloaded this data to create your financials. But now, fast forward, that language became part of our engagement letter that said we're not responsible if you of for your systems, and if you lock them down, we're going to create financials based on X date when we pulled this data. So those are just some examples too, because those can be, lawsuits
Yeah.
potentially.
I mean, absolutely. And I imagine too that the CAS engagement letter, there's got to be a lot listed about client responsibilities. I think I've heard people say like that's the longest part of a CAS engagement letter. So can we talk a little bit about what you want to cover in terms of client responsibilities in your engagement letter?
Yeah, so we have one full page dedicated to client responsibilities. And when I say that, within Infinite Ties, within the CAS community, we do have a full CAS engagement letter, CAS specific engagement letter, and CAS specific statement of work. So one full page of the client responsibilities. And that can include like, what they have to maintain on their end, what security is there, because if they don't have security, and this is another example, but if they don't have security from what they're doing and we're coming in and we're implementing software and technology and they're putting themselves at risk and putting us at risk, that's a problem. right? And like another example of that is that we had a client that used the same password for her bank, for bill.com, for her financials, for her email. And so when somebody had hacked in, they
Password 101, you don't do that. Yeah.
exactly, right? And so they were tracking her and the project. So they started submitting invoices with these project names.
Mhm.
And they were approving them. We were doing all of our protocol, but because something got pushed through that we covered on our end, that was like a $50,000 payment that was made to a fraudulent vendor. Um, that put us at risk. And so not knowing who was going to have to cover that expense, we had to submit that to our insurance company. But that had nothing to do with anything. It had nothing to do with our software vendors. It had nothing to do with our services. It was everything that was on the client. So that's one example. Um, Another example too is, that they're responsible for the integrity and availability of their systems and their people and their processes. I mean, the data is only as good as what we get, right? And so have they been forthright? And a lot of that is in a standard engagement letter. When I say standard, I mean audit and tax. However, from a CAS perspective, you're just even going that layer deeper, right? Because we're creating um, this financial data off of the information that you are giving us. I remember, like, I have so many horror stories, but then I remember one client that we had him for like 3 years, and we just said, "We can't trace this money that you said you paid." And he's like, "Oh, it came out of this other bank account." Well, this other bank account was under the company name. And I'm like, How in 3 years have you not mentioned this bank account?" And so now we have something that we haven't even been accounting for that you did not tell us. So it's like all of the words of client responsibility, like you're providing all the information, the integrity of it all. So that's another example. Um, there's a breach or compromise with that, like the client, so going back to anything that's an integrity breach, the password breach, we now get to dictate what it is you have to do, and you now have to follow our protocol and processes. Maybe
Important.
that's like you bring in our audit risk, IT risk team that's still
Yeah.
independent, or a independent audit IT risk team, and mitigate all of this. And if you don't mitigate this within a certain amount of time, we have the right to cancel you, right? Because you're putting us at risk too. So that's one. Talked about accuracy and completeness of information. That was one of my examples. Approvals within inside apps. So this is a big one because CAS is really based on tech stack, right? Like that's how you just do everything within CAS. But like as an example, let's just say you're setting up bill.com for them and they're on the accountant's console, but you want the terminology in your engagement letter that says, your approval is your signature, right? And we're paying on your behalf, but we're not signers on your bank account, right? We're creating these integrations, we're setting these up, we're setting up all these systems, but ultimately you the client have that responsibility, and you the client understand if that approval is your signature, that you are authorizing us to pay although we're not a signer on your account. So those are that's another example.
And
Another
those tech stacks, I just want to say, can become really convoluted. So if you think even in terms of specialization, like the construction industry, you've got Notify and all of these unique apps that are become part of that tech stack for that client. So I think that would be even more risk then.
exactly. Absolutely. Um, and then, you have when it comes to like we've closed the books, and there's two issues here. We've closed the books. One is you have internal accounting staff or an internal accounting team, and they made a change after we issued financial statements, right? Now, whatever changed, we're now spinning our wheels, trying to dig, trying to run these audit trail reports to figure out who changed what. So even just the wording of we have the right, once we've issued financials, to lock down your financial statements, and you don't give the password. And if there's anything that you need changed, you need to let us know. And then if there's anything that does need to be changed too, after we've either close the financials for the month, or a lot of times it'll be, we closed your financials last year, and then they want to make changes. That's also out of scope, right? And then we get to decide with the client when those changes are going to be made. So if they're immaterial, we might just make that change in the current month and not go restate any previous years or previous months. But all of that type of language is putting all of that ownership on the client.
And creating very clear roles for the safety of both sides.
Correct.
Really is, I
Yes,
think, that the way
absolutely.
that that all comes together. Let's talk about intellectual property and work papers then. So in terms of the engagement letter, who owns custom reports and work papers, and how does that play out when you're creating these letters?
I think that every firm is different of who owns that. It's really a firm choice. However, I feel like there are some best practices in how you want to also protect your firm. And so the way that we recommend is that your work papers are the firm's intellectual property, right? Are we providing those with some of the deliverable packages? Absolutely. But they're either in PDF or it's not like you get our entire Excel workbook or all of our formulas. That's just not just something that we ever offered our clients. But if they needed it and wanted it, we'd send it in PDF. But again, the language in the engagement letter, though, states this in advance that the client knows in advance to becoming a client. So when that conversation comes up, they already know.
Makes sense. Makes sense. So let's talk a little bit about barriers to entry, and that's what you don't do. So what operational boundaries belong in the letter as well?
Yep. And so I think this is really important too, to just keep reiterating to the client is best practices are you don't handle cash. You're not making bank deposits. Checks are not being mailed to your firm to anywhere, right? Like this
Yeah.
everything is all documents received are electronic. Any bills, like just nothing paper. We had an example with a client, another horror story, example with a client where they said, we mailed our homeowner's insurance was mailed to your firm. Well, how do I know, like, if that even made it to my desk or to my team's desk, right? And so
Right.
we didn't get it. It didn't get paid. It wasn't caught, and so then they canceled their homeowner's policy, which was in a mountain property that they couldn't get renewed or reinstated. We begged and pleaded and we actually got it reinstated, but those are examples, right? Like, is that language in your engagement letter so that they know that you're not going to be responsible for anything that's not electronic?
So I mean, to put it simply, it sounds like you're listing like non-services and like how things are like handling rules. Does that
Right.
make sense? Is that a good way to put it?
Absolutely. Yes.
Smart. Smart. Makes all the sense in the world. So then let's talk about payroll with a third party vendor. Um, I mean, payroll can be a minefield. We all know that. So what does the letter say to support getting into payroll trouble?
Right. And so we have an entire page on just payroll because when you really think about the risk that your firm is, like the high risk points, and this is one of them, sales and use tax, property tax returns, payroll, right? And so most firms are using a third-party provider, third-party payroll provider, when they're submitting payroll for their clients. But again, do you have all of the legal terminology stated and signed off on in your engagement letter of, what the flow and the deadlines are? How far in advance does that information need to be given to you? If it's not provided to you and their payroll's late or something didn't happen, is that on you or is that on, the client? Um,
Hmm. And
how
I'm
the
sure payroll's never late, right? Payroll's never late.
It's never late. No, no, no. And
Never,
so,
never.
and unfortunately, clients like to do that to a lot of firms and practitioners is, oh, here it is last minute. So then the
Hmm.
firm is rushing, and that's when
Yeah,
errors happen, right? That's when things go
right.
wrong. So it's, what does that look like? What does the approval process for that payroll look like? Are you going to approve it before we submit it? Or are you sending the information and we're going to tie out to a master payroll file and we're fine to submit payroll without your approval? Another one too is like jurisdictions. Like I love this when clients add people to new jurisdictions and then you're not notified and you don't know, and now all of a sudden you're not in compliance with the payroll guidelines for that jurisdiction, and now we need to help the client go obtain a payroll withholding number from that state, or whatever that jurisdiction is. So putting the ownership on the client to say, if you have employees that are going to be in a new state or a new jurisdiction that we don't have set up in payroll, you need to notify us in advance. Um, that's another example. Um, eh, we also, within our engagement letter, is like it's our favorite thing to say, stay in your lane, right? And
I love
so
saying that just on a regular basis. Yeah.
just stay in your lane,
Just
do
stay in
what you
your lane.
know,
Right.
just stay in your lane.
Stay out of my lane.
Um,
Yes. Yeah.
exactly. And, we're not an HR firm. Unless you're offering HR services within your CAS service offerings, we're not an HR. So we're not making employment decisions. We're not providing that advice. Really, even getting down to, is it your responsibility or is it the client's responsibility to tell us when they're eligible for 401k and eligible for these health benefits and all of these things? So
Yeah.
really defining your scope and where that responsibility lies.
If that's true of payroll, that's got to be true also of accounts payable and vendor platforms, right? So, like, what about AP tools and vendor breaches? Like, what do you have to say about that?
Yeah, and we touched on that a little bit with Bill.com too, is like as an example of Bill.com, it's, do you have it in your engagement letter that you are their approval is their signature and you're authorized to make payments without being a signer, what the segregation of duties are, who is approving, and also like who even can make a request for an approval chain and the chain of command that has to get approved from within the client, right? It can't just be, Susie that's in the office, um, that can make that request and that would get approved. Um, Again, too, like how you're paying vendors and what's the verification process for a new vendor? And are you able to just set up new vendors and submit based on what's coming into your inbox as a bill to be processed? Again, where does the ownership lie within, yeah, making those changes?
Yeah, makes sense. So, third party systems and reliance. Let's talk about that as well. This engagement letter is getting really long, by the way. Thank goodness you guys have this all documented. So, clients run a ton of external apps. How do you avoid being responsible for all of them? We talked a little bit about this earlier, but it can get out of hand.
Well, it is. And what's interesting in this section, which I like to consult with firms on too, is that you have this third party clause in your engagement letter, but then you have a lot of firms that are using technology for their secret sauce too. So maybe you didn't get the client's permission or approval, but is that captured in your engagement letter, right? And so, you're trusting these vendors, the clients are trusting these vendors, but if there's happens to be a breach within any of those vendors, that's not on the firm, right?
Right.
Because it's just not something that firms can control on any level.
Right.
I don't
Yeah.
think so.
No, I agree with that. I agree with that completely. They can't control it. They can't know every single app that's coming in, that the client may or may not be using. And sometimes they bring them in and then they're inactive, and it can be a whole thing. So let's move on now to offboarding, scope creep, and statement of work.
Yeah.
How do you close the loop on scope and offboarding?
Well, closing the loop is really just defining the scope, right? It's doing the prospect analysis if it's a new client, fully in depth, accessing all of their systems to know exactly what's within scope, right? And within the engagement letter, statement of work, putting a clause that says the pricing is based on volume as of this specific date, right? Because what you want to do when we talk about pricing and you come out of the gate from a fixed fee perspective, you still want to mitigate risk so that if with the client's growth, the firm's not, losing money, having, minimal margins on that, or just losing on that engagement. So it is having that language that covers that transaction volume at any moment in time. And should it change over the course of X amount of, 30, 60, 90 days, whatever any firm decides, for a consecutive period of, 2 to 3 months, we reserve the right to have the conversation with you to adjust pricing, right? So it's just like, how are you protecting the firm from that perspective as well?
Everything you're talking about, it's a lot to put in an engagement letter. So it makes sense to me that firms might just throw up their hands and say, we're just going to copy and paste an audit and tax engagement letter and use that. But that leaves them open to risk because everything you're talking about makes complete sense to have in there. You just got to put in the work to do it. However, that's what you're here for. So, can you give just like a quick checklist of everything that goes in there, knowing also, listeners, that we will have this down there in the show notes that you can grab as your takeaway?
Yeah, and I don't even think I'm capturing everything that goes in. These were just kind of like highlights of it. But to your point, when you really start thinking about this, your typical engagement letter is not covering you for all of these things, right? And so, again, just high level summarizing the client responsibilities, the data accuracy and finalization, approvals within third party software platforms, intellectual property and work paper ownership, barriers to entry, payroll via a third-party payroll provider, accounts payable, accounts receivable, third-party systems, and then really what constitutes the change orders and or the change in pricing as well.
Yeah. Okay, so let's that's a lot of information. So let's talk about closing and next steps because I think we are at the end of this podcast. It's a lot of information. We definitely don't want to overwhelm people. So what's the final word, Christine Triantos, CAS expert of all CAS experts?
I think right now it's, we're in this repapering time frame, right? Because we're coming up at
Hmm.
the end of the year. So
Yeah.
really stop and consider, what do you have in your engagement letter? What is missing? And we even just, recommend our engagement letter it's a small fee. It's a legal document, but we take no legal responsibility for it. But um even if you're taking a page or two or a section out of our engagement letter that you can just insert into yours. We're not saying you need to change at all. We're just saying make sure that you mitigate risk and add whatever
Yeah.
is missing for whatever CAS services that you're offering that just protects you, your team, and the firm. And so now's the time to do that. And so, again, the way that firms use either an engagement letter or SOW or a combination of both. It's just reevaluating what that looks like given we're in the last quarter of this year, and what
Yeah.
can you do to just have that in place for January 1.
Yeah. And for those who don't want to put it together, what you're saying is that you've done the work at Infinite Ties. You've done this for them. It's there for a fee, one and done.
It's one and done. And
Start
it's not
over.
legal advice, right?
Yeah,
Still have your attorney look at it, still have your,
of course.
obviously your firm leadership, whatever, but at least it's there. Even if you consider it a starting point and you want to reword it, it's there.
Yeah. So we're gonna wrap now. Great information. I'm gonna leave listeners with the question: is your CAS engagement letter protecting your firm? Probably not. Let's re-listen to this podcast if you need to. Thank you, everyone, for tuning in this week. Come back next time when we have another CAS packed episode for you. That's our promise to you. And this is Fancastic.